Hi there, and thanks for watching. I want to spend a couple of moments and talk to you about a Forex trading technique that I love and I think will be very, very helpful for you. I call it Get Right Trading. This is all about how to get on and stay on the right side of the market. That is a very big challenge for many, many traders, and there are some very clean, clear techniques that can help improve that a bunch. Let me explain. First off, I'm Jared Johnson. I'm the founder of Day Traders FX, and I've been trading the Forex market for about 15 years. I want to talk to you about probably the number one complaint that I get from new traders and even semi-seasoned traders. How are these trades going against me immediately? Or how did I miss an entry? Or how did this thing completely do opposite of what it looked like it was going to do? Oftentimes this can be cleared up by a very simple trading technique, and I'm going to show you that in just one moment on a chart. I wanted to let you know that this also applies to long and short-term trading styles. And the little simple technique that I'm going to show you is good for profit targets as well as entries. Allow me to explain. Let's head over to a chart. Here is the euro versus the US dollar. This is just a 60-minute chart, and this is the chart that I use probably the most in this technique that I'm going to explain to you. Now, there's a lot to say about this. This will be something that you can apply to your personal trading style. If you don't have much of a personal trading style, let me know. I'll be happy to help you develop one. But if you already have a personal trading style and you've got a good way to find the direction and the trend of the market, this is going to be golden. Let me show you how it works. Let's say you are ready to trade the euro dollar down. You can see it's starting to run down. Some of the larger time frames are telling us that it's peaked out, it's starting to turn, it's breaking below trend lines, it's giving us big bearish patterns, and so on and so on and so on. How do we tighten up those entries? Well, the method and the technique that I'm going to show you is going to pertain specifically to these kinds of movements where you get a strong run. You can see these 3 or 4 or 5 bearish red candles right here. They just go straight down. There's absolutely no pullback. They go straight down. Or a candle like this, whether it's news related or other, where this just is all in one candle headed straight down. So this technique I'm going to talk to you about is simply looking left of that movement, and what we look for is this stuff right here. We look for these little pockets. Now, if I draw a trend line, or excuse me, a support or resistance level right here, you can see that there is something going on right here. So what happens? This runs down, looks like it might be making a bear flag or some other pattern where it could continue lower, and it does try to push a little bit lower. Spikes a little lower, comes right back up, hits that area. Now, like I mentioned earlier, you can use this as an entry point, and you can also use it as something to trade towards. In this case right here, you can see that this ran down from about this consolidation in all this area, right, was just below 120. It's about 119.60, 70 area. It ran down very quickly to 118.70, so about 100 pips of movement down. Went sideways and traded right back up 100 plus pips. In this case right here, very good example to trade back to that target. Now, again, there's a lot of backstory that we have to talk about here, what the actual trend is and all the things that are happening in this currency pair, but you can see that these little levels become very important, and I call them just the little levels that are left of the movement. Big movement, left of the movement, this comes right back to it. Look what happened right here. Here's another big spike down. So what do we have? We have this right here. This is our little consolidation left of the movement. It runs down, looks like it's going to be a very strong bear flag, just kind of consolidates, goes sideways. What happens? It pulls all the way back up to that level before making that nice trend continuation and that nice drop. You can see this happen over and over and over again. You can see it on smaller movements like this right here. That's a nice straight down candle, not quite as big as this one, but something to keep an eye on. So what happens? We mark the movement just left, and look what this does. This runs back, runs down, runs back up to that area before continuing lower. So this makes for an excellent point to start looking for entries. If you have a strong trend that you can trust in, look for these kinds of movements, wait for the pullback, and trade from that pullback. In this case right here, we're taking entries at that pullback. So if you were to get into this euro dollar right here, right at 119.85, it would have gone against you a whopping 15 or 20 pips, but the long-term movement was well worth it. Now, if we're not so sure about the trend, and maybe something is sideways, or maybe it's maybe we had a big movement against the trend, And this euro dollar back here was quite sideways. You can see right here it's just up and down, up and down, up and down until it started to pick up a little bit of trend there. But something that's maybe a little more sideways like this movement right here, we can look at these and we can watch that level and trade back to it on a smaller time frame. So there's a nice little example there. Let's have a peek at, say, the euro yen. Euro yen's a great example. Euro yen had this nice little run up and it kind of hopped all around. And what happened? We had this big spike lower. Big spike lower right here. We had some big spikes lower here as well. And there's our little consolidation. Spikes lower, pulls back to that consolidation. And then what happens? It consolidates right here again. There's our little level to watch. Goes straight down. What happens? Doesn't really end up pushing too much lower. And it ends up coming right back up to that level before selling off and continuing lower. So what I want you to watch for is look for these little movements, look for these little consolidations, look for these little pushes for the market to come back and test these levels. Look what we had right here. Even looking at this thing running up, we had a straight up move. There wasn't too much consolidation right there, but I bet that level's going to get hit as well. We just haven't got there yet. But look at that bigger level. This ran up and it's come right back down and just missed that by a couple of pips, and it's headed right back in that direction again. So these levels will happen over and over again. Again, on shorter term time frames, you can trade back to these levels, and if you're trading a little tiny bit of a longer term movement, you wait for the pullbacks to those levels before entering the trade and taking it in the direction of the trend. It's one of my favorite methods. I hope it's helpful for you. Thanks for watching, and very best of luck with your coming up trades.